behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed income.
Yes. Federal chairman there, man. Can you get enough of that?
Since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight.
All right, so what the Fed chairman says is he is dedicated to burning this thing down. You will not grow. Cutting heads. Going to raise the cost of money, man. That's where we're at. If you have my free ebook, you don't have to die broke. This is your blueprint, man. You know, if you're a normal person like me, this is my blueprint. Like all the shit I'm going to do is right here. So, I mean, right now, shit, I'm down at least 20 plus. I haven't looked at the other account. So, financial fear, man. Now, if you've studied charts, you know the RSI kicks in during financial fear right here. We know when this goes sub 30, I don't need to hear the federal chairman. I don't need to hear what he's saying. Shit, I can look at the chart and tell you there's a problem right now. You can see price. You don't even need to know the reason why, right? So look where the S&P 500 is, man. Man, look at this little pattern here. This is weird, huh? Just a patch. Each one of these is one day in the U.S. stock market. And you can see how it moves, man. And you notice when the RSI got extreme, what happened? Price stopped. News changes. Boom, goes the other way. Now what? Now we're banging sub 30s. 28 on the RSI on the S&P 500. We have a completed move. So fear is at the highest level it's been in the last 2 months. We've gone from here to here, straight down, just like we went straight up. And you have a lot less money than you had if you're in the stock market. Now, if you're short, maybe you made some money, but now you got to figure out how to keep it. So if you're a short seller, are you covering here or are you riding it? How far are you riding it? How are you going to know? And that's speculation. There's nothing wrong with that at all. You could also hedge. You could take money. You could just go short the market. You're like, what do you mean? In one account, you're short, and the other account, you're long. And maybe you only put that account on when you feel like you need to get short. You can hedge the market. That's just knowledge, right? But my playbook is what I talk about in You Don't Have to Die Broke. It's free, man. It's free. Go read it. Chapter 9, there's a whole chapter on dealing with financial fear. This is fear right here when the RSI goes this low. And it's across a wide range of stocks right now. Go look at AT&T. Look at this. It just keeps going, man. It just keeps going down, dude. And it's like, look how far below. I got a new ebook coming out called Chaos to Cash. It's not quite completed, but I'm going to give it out to my Instagram subscription. So those dudes that do the little subscription with me, I try to show private shit like the numbers on my Airbnb. I'm going to show rent collections. I already show everybody dividends. I'm just trying to show them behind the scenes what it's like to own a bunch of property and just try to make money with money, man. That's what I do. And so if you own assets, so I own enough that AT&T, they give me a couple $1,000 a year. This thing's going straight down. So if we go look and we say, how much is this stock worth, man? Now this could change based on the economy, which is why the market's dropping, right? So Morningstar says it's at a 35% discount. Morningstar. 35%, man. They say a fair value is $25. Now there's problems. Look where that yellow line is. This line here is watched by a lot of institutional players, hedge funds, insurance companies, endowment funds, private offices like myself. Meaning if you got $3, $4, $5 million invested and you're smart and you manage it, you can make a couple $100,000 a month. I mean, fuck, you should at least be able to make $100K. If you got $3 or $4 million invested in real estate and stocks, you make money just sitting at home. Well, you can make money just sitting at home. The game is fractal. We talk about that a lot. It's mindset. So right now, if I was loaded up on growth stocks, I wouldn't be buying growth stocks. I'd be buying AT&T. We'll get to the growth stocks later. I'm not selling them. Dash is down. Uber's down. I'm not selling them. You can sell them. I'm not selling them. But I'm not buying those right here. I think we have time on those. This here is an arbitrage. This has gone straight down. Look, from $20 to $15. At a certain point, you're getting fucking ridiculous deal here, man. If you got a long enough window, if you got a time frame, and if you're watching this and you got money, this is the advantage of guys that make money. Once you make money, it's easy to get rich, man. Once you're making a lot of money. Talked to a guy the other day making $800,000. Imagine making $800,000 a month or a year. I mean, shit, it's almost $80,000 a month. God damn, you could buy 1,000 shares of AT&T a month for the next 3 months. You're going to collect that money for the rest of your life. Like you could buy a guy like that could buy $250,000 of this. I mean, what's the dividend on that? Where's my other phone? You guys think, well, you might not have little money. Not everybody's got little money, man. So you're watching this. Guys in the NFL makes $500,000-$600,000 a year. That'd be crazy to put $250 in one of these. Fucking lock in income streams for the rest of your life. Or you just go blow it. That's an option. Well, let's do $250,000 divided by, what is it at? Let's say 15. That's 16,000 shares. What's the dividend on this? $0.27 times 0.27. That's $4,500 every time they pay. Bam! Just collecting money. And man, they're sitting at 2-3 times that, man. Like these aren't even risky plays. Like this shit here is you're just gonna get money. You start stepping out on the curve. USA. This is a closed-in fund right now. It's got a 12% dividend yield. These guys here go out and buy stocks just like you can do, and then they leverage it. So they own Google, they own Microsoft, they own Apple, plus they pay a 10% dividend yield. And you're like, what do you mean? Okay, watch. The SPY, which pays like a very small dividend. Notice the chart pattern. Sideways up, sideways down, right? Look, it's gone straight down. Well, USA tracks the market, but it pays a 10% dividend yield. So it's buying shit on leverage that tracks the market, and then it buys a bunch of dividend stuff in the meantime. So it's trying to track the market while paying out a high return. So that's obviously a risky leverage thing. The dividend yield on this is 12.7% right now. 16 cents. 16 cents. 16 cents. So 100 grand divided by 5.65. That's 17,699 shares times 16 cents. That's $2,831. Bam. Just like that. For the quarter, right? They're going to give you 3 more of those. So that's $12,000 a year, man. It's fucking amazing. And remember, that kid came on my live and he said, I inherited $200,000. What should I do? I mean, dude, you spread $200K around things paying 6, 7, 8. Even if they cut the dividends, even if the economy gets bad, all they're going to do is cut them. It's going to go down. You're going to keep collecting money. Then they're going to, now we've gone too far. We got to lower interest rates. And that 3-4 years from now, new fucking president, we got to lower interest rates. And this game starts over. Like, that's how it plays out, man. It's going to keep playing your whole life. So if you're a person with some money, you need to be reading about closed-end funds. Like, you should know about this shit, man. You need to go be reading about bonds, how bonds work, like how properties work. Like this return, this drip, 12, 15%. You know, what is that? That dude just got free, inherited $200K. You can go fuck that off or divide it by 580. 34,482 shares times 16 cents. It's $5,517 every time they pay their dividend every 3 months. Be times 4. It's $22,000 a year doing nothing. All he's got to do is go back to work. Let's do this deal a couple more times. Like, that's how simple, passive income can be. And listen, that's what you can buy with clicking a mouse. Imagine what you can do when you're the owner. Like, if you do what these guys do, like you learn how to leverage and do what they're doing, you can make even more because they're charging a management fee on top of this. So there's people out there that buy shit all the time that pays, this is 12%. I got shit that pays 30. We'll do the math on that. All of a sudden, that's the power of this here, man, of what you're seeing. Now, if you got small money, the drip's not going to be that big on that, right? But another way to look at it is whatever it is, whatever the asset, we got to be alert when it's on sub 30. Like, this is when you're a buyer. Get it? Like, this is when we're buyers, man. This is when we're watching. Look how it falls in place. Now, this one, what in the bottom was it? And then it ran up. And then it went down, right? And then what? Then it ran up. Well, where are you at? Net buyer, net buyer. I'm buying in here, and a month later I'm buying a little more. Now what? It's up here. Well, now it's back down here again. Okay. How long are we playing this? Well, what if there is no end? This pays 12%. What if let's get 30 in there? Why not? And then it just keeps paying you fucking forever. Rest of your life, just drip, 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 drip. People sleep on this, man. Chapter 9 is about dealing with financial fear. It says, as we've discussed, protecting wealth through diversification, through assets and separate accounts with different objectives. That's the very first sentence in my free ebook, Dealing with Financial Fear. And I get a lot of people, and then they're like freaked out. And it's like, yeah, dude, of course, you own one thing. Listen to the very first line. We have discussed protecting your wealth through the diversification through assets and separate accounts with different objectives. Now we need to discuss the possible most prolific stealer of wealth at all is fear. Financial fear is responsible for robbing more of the world's wealth, in my opinion. And guess what's the biggest waster? Inheritance. Windfalls and inheritance, most people immediately blow it. Like, but if you know this, if you're on this game, if you've been leveling out, if you've been buying some of these things. You've been picking, like you're doing that game. When you get a bunch of money, you know what you do? You do what you did yesterday. And that'll attract money, man, doing what you did yesterday. So learn about these closed-end funds. You know, even if you just had $500 in there and you get paid a drip, now you know how to do it. Like you've seen it. You get what I'm saying? So I need to be in these. And this is just one example. There's hundreds of these. That's just one that I'm in. Well, let's look at Uber. Uber's coming down. Stage 4 decline. Looks like Uber's going all the way back to $22, $21, right? If we're following the money flow. But what's really going to happen? It's going to stop when the RSI goes extreme. So what do I do right now as a guy that's trying to accumulate Uber? Remember, I'm trying to sell Uber in the 50s. I'm not trying to sell it below that. Do I buy Uber here? No, man. It's not on sale yet. RSI is 38, just crossed over. Shit, if anything, you were trying to short it yesterday. If you're a super short-term trader, right? Guy might short it and took some off today. I mean, you can see the little money flow pattern there, depending on your time frame, right? But we're expecting it to go all the way back down where it's been before. So somewhere in this region. Long before it hits that, though, RSI is probably going to go extreme. And what? You're going to have a money flow pattern. Sideways, up, sideways, down, right? And then what? Sideways. And that's Uber. I don't want to buy this. Not right now. It's still got room to go down. What I'm looking for is shit that's gotten waxed. If I can find stuff that's gotten waxed that pays money, now I'm interested. I don't need shit right now. It doesn't pay me money. Look at this. Hanes Brands pays a fat ass dividend. It is now $7. I own this at like $20. It's $7. I haven't sold it. They keep paying me. So the only thing that would get me to sell is for some reason we think they're going to blow out. I just don't see that happening. But it has drastically gone down. And these are the times that are like it'll begin to test your resolve, you know. And it's a core holding of mine. What is the dividend at now? 7.5%. Fucking 6 PE. My God. Six PE, man. 7.5% dividend yield. Look at MO. Like they're just handing out money, man. Let's see. Look at this. Bam. Look at MO. I was saying yesterday this setting up as a swing trade. I guess raising interest rates messes with cigarette sales. Dividend yield 8.69%. Pays 94 cents a share. So 100 shares, $4,164 pays you $94 4 times a year. You're getting $400 basically, which means they're going to buy you 10 shares free. So that money drip starts buying money drip. But see, we don't want to stay at 4. We're trying to get to 40. You know what I mean? Like over time, we want these positions to get larger and larger. One way they get larger and larger is through compounding the dividends, but the other way is through buying on these stage 1s, man. Accumulating. I don't know if it'll keep going up or down. I don't know where it's going. I don't know. But I know the price moves in 4 stages and it floats, you know, and then it'll start to go sideways. So what I do is just tag those. If it goes to another one, I tag a little. Goes to another one, I tag a little. Where I put a lot of my trying to think shit through is where's the best return for that. So if I got a couple of things going, it may not be an MO. Maybe I'm like, fuck, let me at least get 1 share, man. Let me get 1. I don't want to be greedy. I got this other stuff going on, but let me get 1. If you're just in the flow like that, man, like every day, just watching the markets, looking at your charts, and if you, man, anybody's got money coming or has money, it's so easy for them to get rich. And if they have money, if you don't have money, it's tough, man. But if you have money when everyone else is fearful, you could level up in life. That's what happened to me. I started buying houses in 2003. I didn't know that was after the dot-com crash. Like, I didn't catch that. I wasn't really thinking about that, but houses were a lot cheaper. Right? And then 2008, we crash. And it's bad, like, for years. Goes higher. I mean, that's the game it's going to play, man, your whole life. And in 2008, I didn't know like I know now. Like I didn't know the play. Like it didn't feel like, oh, you just keep buying. You buy everything out there, man. Bank of America, dollar, you buy it. Ford at $1, buy it. Like you're just buy, keep your thing, buy it. Like that was the answer, man. The whole way through everything. My whole life has been just fucking buy it. Buy it. Is it on sale? Is it cheap? I'll buy it. Let me have it. Malls, shopping centers, parking lots, fucking anything. Here, I'll take it. Like just buy things. If they make money and they're cheap, you buy them and you accumulate them. It's super simple. But people aren't thinking about that. They're consumers. They're spending money, not buying money. This is buying money. So you need to go read on this. What do they think it's worth? Understand the business. And as you look at your portfolio, man, if we were to bust it open, pretty soon that thing gets to be kind of pretty. Let me see. Look, it's only by undervalued 17%, man. It's not a lot, right? That's not a deal. Think that's a deal? That's not a deal. It is a stage one. But you see how I'm kind of thinking about that? Like we need to see what's the value of this. And it may be more valuable to you than me. Like we mean, I might have a lot of it. Like I do. I've got like $37,000 of this. So it for me, it really needs to get on sale because I'm looking at some other shit that I think has more upside. You know, I'm still trying to get my mind around Hanes Brands, why it's so cheap. You know, their numbers aren't bad. They've had some problems. They got undervalued 67%. Like, fuck, what if they're wrong? What if it's only 50? So I got to weigh that. Like, okay, in my own thing, I got a whole bunch of that other shit paying 8-something%. This one pays 7. So as I'm filling this out, I'm going down the list. I got mortgage REITs, I got business development companies, I got tech companies, I got oil companies, I got, right? You see what I'm saying? So as I'm adding money, I'm thinking, okay, what's the overall best play here, long term? Let me see if I can pull some in here. So look at these. You're going to notice a lot of these. So my shit's all broke up into like 5 accounts. Look at the reds today. Down big. So, and as these positions go higher, right, the value of them goes up. I can't see them all on Instagram. But the longer you've held these and play this game of these cycles, these levels, and you do solid buying below this gold line here. I told you I got a free ebook coming. Everybody's it's on my subscription page on Instagram called Chaos to Cash. And this you're focusing them under this yellow golden line here, 200-day moving average, and they're legitimate businesses, track records, make money, they pay dividends, and you spread your money through those, and you're adding to them on these money flow patterns. Where are we at? On the stage ones. You're just going to accumulate, man. You're going to accumulate wealth. And you got to believe that, though. You got to stay with it, man, as you start building these out. You can't let yourself get sidetracked, man. We live in an age where we're bombarded with information. You need to understand that most of the information is wrong. The major media are almost always wrong about investing and the economy. When prices are moving up, they report on all the money being made, and this causes the masses to jump into the market. Well, guess who the masses are buying the assets from? The smart money purchased these assets when the masses didn't want to own them. As the prices drop, the media reports stories of money being lost. Most people believe the major media. They think, how could all these experts be wrong? So, due to fear, People will wait on the sidelines, and it's not you guys. This is just know your competition, so to speak. Let's see, where am I at? Most people believe that that could be as well. So due to fear, they wait on the sidelines till the experts in the media give the all clear sign. They usually come in too late and often near the top as prices are rising. The smart money is only too happy to sell you their overpriced assets. We have seen this happen in real estate, stock market, even precious metals. Do you remember when gold was trading for $1,800 to $1,900 an ounce and you couldn't escape television commercials or the TV shows on mining for gold? Some investors who don't trust the major media are fearful. And what persuades them is they read alternative media about government debt and worldwide economic collapse. So they put all their money into gold and they bury their cash in the backyard. Instead of investing in stocks and real estate, they invest into bullets, guns, and gold. All three are not bad to have some of, though. Then when the gold soars, guess what? These people are often afraid to cash in and invest the profits in undervalued stock market or real estate. The result is just bad for those who follow fear and make the wrong decisions based on fear and allow fear to immobilize them. Let's see. This is chapter 9 of my book. You don't have to die broke. Let's see. Oh, daily I see how fear impoverishes people in the world of business. Smart, hardworking people who desperately want to quit their 9-to-5 jobs, follow their dreams of starting a business, service, or product, fail to do so because they can't get past the fear of loss. The fear of failure outweighs the possibility of success. It's human nature. People will do more to avoid pain and loss than gain pleasure or profits. Therefore, the entrepreneur is seen as a maverick or unique. The easiest way to deal with fear is to control your debt and live below your means. And I go on to explain that. That's the reason we live frugal. So when times are tough, we can deploy our assets. So we need to be some buying mofos of these income producing things, even if they go down. In other words, if I'm looking for real estate deals, and if it might go down, shit, I don't know. But if it cash flows, all right, I got time. So I need to buy them, but I need to be financially sound. So that's the way you deal with it. Have good credit, make money. You want more than one way of making money. You need side hustle. Like, you get all that straight, then this game becomes easy, man. This is easy. So what is this? It's the SPY. Come on, man. So if you're in all growth, start buying some of these other things that we're seeing, man. Where's 3M? Look at this, man. Look at this. $112. All you guys that are new, I go buy all this shit. The guy said, "What would if you had 10,000, buy all of it?" What do you mean? Go to that's the shit I'm buying. That's what I would buy. I mean, if I wake up tomorrow with $1 billion or $100, it's the same, man. I'm looking for a couple stage ones. This hasn't stopped, so I can't buy this yet. It's dropping. I mean, you might buy one share, but look, it's still going down. So we know the money flow. Look, the momentum just turned to the downside. So this thing is going down. So we don't need to buy this today, right? So as I start going through my charts, I'm like, what's bottoming? If I look at the SPY, is it bottoming? We look at right here. This is the momentum indicator. It's pointing straight down. RSI is 29. That's our first indication there might be a bottom, right? So I'm looking to deploy cash like that. So first thing I'm going to look at is all the dogs of the Dow stocks, man. If I have brand new money coming in, the guy asked me, what would you put it in? I'd go, read the book, man. Act like you read it. Like I tell you in there, fucking dogs of the Dow, it's 10 stocks. I'm looking for stage ones. That's going to pay you like 5-6% yields, and you're going to own the greatest companies in America. Don't need a filter, none of that. It's just right there in front of you. Amgen, right? JP Morgan, Chevron, fucking Verizon. These aren't secrets, right? But what's the secret about them is they pay money, and they're going to keep paying money irregardless. Even if we go into recession, they're going to pay money. And if they go lower, good. You're fucking blessed. Like that's not a penny stock. Like DS, I don't know, might go to zero. McDonald's ain't going to zero. Like that's the difference in the quality of the stock, man. That's why the moves are so big. If you go, these blue chips could drop 50, 60% and then go up 100. Like that can happen. And you're going to get paid to own them. So they're only going to drop so far, man. Chevron, look, coming down. I own a shit ton. I'm probably not buying this, but let's say you don't own a lot of oil. Remember, Mike, I don't know if you're on here, Michael, from our Canadian friend from the Money Flow gang said, hey, if you didn't have any oil, would you take a position here? And I said, well, I'm long a trade. What do you mean? Meaning, no, I'm already long oil. I'm not buying oil here. It's expensive. It's expensive. It was expensive over here. We sold some. So am I interested in this? Not near as interested as I am in AT&T, Haynes Brands, closed-end funds, REITs. Man, there's all kinds of fucking REITs that are paying 7, 8, 9, 10%. I mean, I want to get hundreds of thousands of dollars into these guys. Hundreds. So that what? 3 years from now, that's 600, 700, man, hopefully. Maybe 400. I don't know. Or it's 40 for you. Maybe it's 4,000. All right. Like whatever the number, it's fractal, man. Shit, let's get 4 million. I mean, the dogs can hold as much money as you want to put in it. I mean, that's the beautiful thing about these stocks. Look at this. This is paying 6.5% in you. Dow Jones Industrial. I mean, this is not Dow Jones. This is DuPont. Look at this. $43. Straight down. So we wait, man. It's not time. It's not a stage one. What's the next one? IBM. Straight down. Look at these. It just broke. It's going straight down. So what are we waiting for? Look, RSI is not even. So we have time. Nothing to buy yet. So as we're going through, man, we just need to get, look, Intel, straight down. I wouldn't be buying aggressive here, man. We don't have any bottoms in none of these. Look at this. Straight down. Coca-Cola, straight down. There's no bottom yet. No bottom yet. But here's the great thing. We will buy the fucking bottom. I'm buying the bottom in all of these. Promise you. Might buy this one and then the next one, but I'm going to buy the bottom. And so I just, for me, I drip it. So when a guy says to me, I'm like, read my book. First sentence right there on dealing with financial fears. We have different kind of accounts for different things. So in this account that owns these, the game is to accumulate. And I might trim if one of them runs up real high, like oil recently just went ridiculous. Utility stocks went kind of ridiculous, sold some. Now the shit I bought with what I sold has gone down, but okay, I was building it out. I added Hasbro because of trimming utility stocks and oil stocks. Started adding Hasbro. Now that's come down, true enough, but they've all come down. Shit, oil stocks are coming down right now. So is the new thing I bought. Good. I need to buy more. I didn't have enough anyway. So that's the game we're playing. So now Coca-Cola just broke the 200. You guys, we're fucking lucky. It don't feel like it, but we are very lucky people. 3M, look at this. Uh-oh, Merck. Might have a swing trade here, baby. Dog of the Dow. It's refusing to drop. I like that. Do we got a bottom? We got support. Maybe a call option. The market's going to bounce, right? 29 RSI. There's a target. There's a target. Check the value on that. Oh shit, dude. It's fairly valued. The thing's trading at a premium. Means it's running hot. It's fair value, man. It's fair value and it's not dropping. Shit that's down 60%, that 60% undervalued is dropping. This stock is fair value, not dropping. Holding the 20. See, so now I might catch a trade. This is in my own buy and hold. I'm like, oh shit, we got to go trade this, man. So we come over and we open the other account, the trading account, where we caught that because we're looking for stage ones to add, right? Remember I was saying the same thing over here. It's getting ready for a run. But look, we're about to get stopped out. I'm not stopped out yet. Remember I said this is setting up for a trade. My stop's in here. Took the position. Boom. Still in the trade though. Well, if the market would have ripped, this thing was ripping. It was already set up, man. So that's mapping the trade. I put my stop in so I could have action going here. And now I just looked at Merck and now I'm like, fuck, man. Let me get a little of that. You could either shares, you could do options, you could whatever, however you want to play that game. You know, boom, it's set up. So I would trade that. I'm not in it, but I'm saying that's how I'm looking as I'm going back through here. Verizon, nothing setting up. Oh, back to Merck for just a second. These are the 10 dogs of the Dow, man. That was Merck, right? Come on, man. Let's go to 1 hour since we're trading this and all. We're down a little dirtier. So I would play this real loose. That is underneath all of that. I think I can give it a little wiggle. So I would nibble. And I'm just expecting it to run up where it was, man. Right? This on a 1 hour. The truth is, it's probably come in some now. But my stop's over here. My target's up here. It's going to go whatever way it goes. So, as long as it doesn't bust me out here, I'm going to give it room. And I would nibble. Let's say tomorrow it's hanging out down here. Shit, I might keep nibbling. It hasn't hit my stop yet. I don't consider that adding to a falling knife. I consider it's inside of this pattern here. And I initiated the trade small on purpose. Like I want this to play out. If it doesn't play out, then if it just takes off, then oh well, I got a small position, it hits it, boom, trade's over. But what if it takes a minute like it did all in here and like it did in here? What if it does that here? Then I can buy a share tomorrow. Next day I could add a little. Each time I add, I'm actually kind of bringing my risk down because as this new thing forms out, eventually that stop's going to get moved up, man. So I'm actually de-risking by delaying how much I'm adding. I run the risk that it just takes off. Oh, well, that's a good problem to have. But all my risk isn't on the trade immediately. And that's if I'm watching it on a daily and I was to drop down. That's the kind of shit I did when I did a lot of. I don't short-term trade like that anymore. Not much. Just because I'm doing other things. I'm busy. But, I would notice that. Market's dropped. Market's getting fucking hammered. This stock is not. It's holding the 20. And if we go inside on the 1 hour, we're seeing really solid support here. So, if I'm just looking for trades, that's what I'm looking for. I actually put that stop right down there. Look, it's only $1.50 on this. And our target is what? Up in here and up in here. It's been there a bunch of times. That's easy, 2, 3 to 1. That's classic trading, man. Classic trading. That's how my brain breaks it down. Everybody does it different. There's no right or wrong. I mean, I guess there is. But you see how it looks different on the 1 hour, And we don't know. I have no idea where price is going, man. So as I go back to the dogs of the Dow there, that's 10 stocks. I was trying to explain to a guy, I was like, bro, take all your money, put in the dogs of the Dow while you're learning the stock market. Now you got a biotech. Now you got a couple oil stocks. You got an industrial with Dow. You got telecom with AT or Verizon. You got Walgreens. Yeah, damn, you walk in this and buy something. You go to Walgreens all the time, man. Right? And so as we go through these stocks, Verizon, Merck, we found a trade. So now if we're taking the money flow and we got our accounts separated and we got our buy and hold, we're all getting rich. Yeah, the prices are coming down, but we're getting more share count, our dividend. Every day people text me and go, look at this, man. I'm getting $1,100 a year in dividends. This time 4 months ago, I got zero. I know. Isn't that great? And sometimes I'll send them mine. Look at mine. It's $27,000. That's to encourage them, man. I got a buddy that gets $16,000 a month. That's big money, man. And why? He did the same shit I do. He got money, he put it in there. He just got a bunch of money and put it in there. He sold his business. They gave him $5 million. After taxes, he put $3.5 million in 20 of the top dividend stocks. Most of them were dogs of the Dow. And he collected 16,000 a month in dividends. Bam, 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 bam. Now it's up to like 32,000 because he just went back to work and kept doing it again. He collects like 32 fucking thousand a month in dividend stocks. He just takes the money he makes and buys these things. And then for periods of time he won't. Doesn't matter. Money's coming in. So, this, look, he owns this. It's at 112. So what the money flow allows us to do is a systematic way of doing that. And we went through and we're like, okay, I got a trade set up here on Merck. In our trading account, now we take a trade in Merck, separate from that account. Look how we got all that from 10 dogs out of a free ebook. If you add it to the money flow, you're collecting dividends and you're setting up trades. All from the same 10 stocks, man. Like, dude. Now, I got bored with 10. I got 77 of them. I follow like 150 of the same stocks. Same stocks every fucking day. Same stocks. So when I go up here and I click the thing, but dude, if you do this all the time, over and over and over. So when you're coming through here, it's like I'm in alt, right? Looks like it's kind of set up. So as I come through, I'm like, okay, oh shit, look at ConocoPhillips. I got 300 shares of this. It's down $10. It means I'm down $3,000 just in ConocoPhillips today. Damn. That ain't no big deal. We did it last year. We did it back over in July. It wasn't no big deal. We went it to 120 and then it came down to 77. Remember that? So my buddy Mike, when he said, hey, would you establish an oil position here? No. Why? Money flow, man. Look. We can just look at it. Stage 1 runs up. Stage 3, look. Right? We've tried to play the run. It didn't work. It's come back down. So now what? Stage 4 decline, man. So I'm not trying to build a position off what is either a stage 3 or maybe a new run up, but it would be at what were oil stocks trading at, man? Let's see. What's ConocoPhillips at? Now, I'm not picking on Mike at all. I'm just saying this is how Gerald Peters analyzes it. Is this the bargain? And it's like, why am I even looking at them if I don't own them now? And it's because, well, they're trading at a 15% premium. Do you see how we're on the wrong side of that transaction? We wanted to be buying them when people didn't want them, not when they're trading at a premium, right? We want to trade shit trading at a premium. We want to own shit trading at a discount. Boom. Like, let's turn on some.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%. We're down over 16%. Dow at the same time has fallen about 18%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
2-year note yields went from 190 to 166 in the blink of an eye.
In a blink of an eye. That's the noise from the past. That's the noise you're going to hear. And we may be actually going into a depression, man, or a recession. So get your money right. Get your buckets right. And if if you weren't in oil, you got your wake up signal. Stage 4 decline, baby. So as it comes down, we're looking to what? Buy some. Whew, man, I'm down like 25 G's today right now. So we're looking, but I can't find shit to buy. Look, we just blew through. Momentum's to the downside. Look, blew through. Momentum's to the downside. Blew through. I mean, if you do any buying today, man, I would keep it light. Just nibble. Just be a greedy capitalist. Like you're like, look at these idiots selling Dow. Buy it. Because in the end, they will be, right? You know that, right? You got to believe 70% of the time stock market's going up. Very short periods of time, year, 2 years, it gets waxed. And when that happens, you get a chance to level up or be a statistic. You get to purge or be purged. You need to decide what side you're on right now, man. And get your mind right and get on that. Now, some of you are like, yeah, no shit, Gerald. I know, but some people are new. Some people are like, I can't buy a house now. They're raising interest rates. You're like, how do you know that? Let me end with this. You guys tell me, okay? Let me show you something. that house I'm working on. Now, I had it rented for $900. I'm going to raise the rent to $1,050. Now, I know some of you live are like, oh my God, that'd be $2,500. Not here, okay? Money's fractal. I mean, it's different places. Now, I've been working on it. It looks a lot nicer since I've been working on it. Oh, go look at my pictures now. I made it look nicer. So I'm jacking the rent. So I called my realtor kid. I was talking about this morning on Twitter, and I said, hey, man, I want to sell this property. How much can we get? He walks around, comes back, looks at me and says, how much you think? And I said, well, I wouldn't take any less than, I like 170. And he said, let me see. He leaves, texts me back, man, I think all we can get is 145. And I'm like, bro, at 145, if you put 20% down, I was like, well, then you should buy it. At 145, you put 20% down, that's what? You're gonna need what, 30K down? So you put 30K down. The house is perfect. It's brand new. I redid the kitchen, the floor, roof's 3 years old, the AC's brand new, it's been painted. This is a perfect home, man. I fixed every crack, every door handle, everything works, man. Perfect. And you're saying 145. And he was like, yeah, 145. I go, okay. Well, put 30 grand down. You could rent it for 1,100, man. We're gonna rent it for 1,100. If we'd sell 145 and you put 20% down, that makes your mortgage payment like $750. Taxes, insurance, all. You're in for about $750, $780. But we can rent it for $1,100 all day long. I was like, if that's the case, if this house is only 145, you should buy all of them, dude. Start buying. And he didn't get what I was saying. I'm like, dude, do the math. 30,000 down. You got a $750 payment. You're collecting 1,100. You get it? The house will appreciate. Right now it might be coming down, but it will appreciate. And you're going to raise that rent. And they're going to pay off the loan. Go buy all of those you can buy. Like, go do it. That's what all I've been doing. Like, matter of fact, go get me about 10 more so that I can start buying them. I'm like, you're a realtor, dude. If you could document that, go find all these properties. There's plenty of people outside of this area that would buy all these they could get their hands on if what you're telling me is true. And it is kind of true in my area. You can buy houses like that for 140, 150, and then put money down, you rent them. I mean, that's a simple game. But he's not seeing that game. Why isn't he seeing it, man? He's trying to survive, man, because he makes his money selling houses, and houses, prices are coming down. So I'm not selling. I'm not going to sell. In fact, I'm going to collect $1,100 a month, man. I got no mortgage on the property. So it's worth more to me owning it, meaning right now I don't want to sell ET, right? I want to accumulate ET. I don't want to buy it now because it's not a big enough discount. So if I go over here and I look at Energy Transfer Partners, which is a good thing to own, but remember, we were buying it a while back, man. We're buying it when it's cheap. So is this where we want to put our money today? Dude, they say it's undervalued by 35%. That's crazy. I wouldn't have believed that. Well, then I'm wrong on ET. 35% I'm interested. But RSI is not there, right? So we want to buy this stage one. So it was a good move there, right? And then it came up. We're going to get another one. And then look at that pattern, man. That's the money flow. Look at this. ETRN. Damn. Dude, I'm getting waxed today. My account is getting waxed. Let's see. But we bought a bunch down here, or I did, and then back over here. So we bought some in there, and we bought some in there, and then it ran up. Now we're getting a chance to do it again. And this is how you're going to get thousands of shares, because over a 3, 4, 5, 6, 7, 8, 10-year period, if you keep your game on this, you keep your mind on this, you keep playing this, these are going to accumulate, man. You're going to have shit tons. So, you get what I'm saying? All I did was took the people money from here and came over here and started buying stuff. That's a whole nother class, man. You're like, what do you mean? Meaning you buy these, and when they pay you rent, cover your taxes, your mortgage, your insurance, take all the extra money, come over here and buy this undervalued stock at 8%. And since you didn't do it with work money, you're not that mad when it goes down. And then they're going to give you dividends in the meantime. So you use someone else's money to buy this, and then they give you dividends. So this is giving you money, and they're giving you money, and it's not your money. That's when you get that transfer. Get it? You get that transfer. You start taking money for money. That's making money with money that I talk a lot about, man. Hey, you guys be good. I got to go work on a property, man. Appreciate you hanging in there.